Hello, Oracles. How's it going today? Today's going to be a shorter live stream, but I wanted to get into gaps. I say it all the time on here that gaps fill 9 out of 10 times. And I've had many of you guys questions say, hey, where is this information that you're getting this from? Craig is one of them, and several of you guys wanted to just know, exactly where it is that I'm getting this information and how it is that I can find these gaps. So I wanted to share that with you guys today. So I will do that. And I apologize for not doing it previously. For me, I am still learning about live streaming and screen sharing and things of that nature. So my technological abilities have held me back from doing this. And so I will get to you guys today on it now. Let me see here. I'm going to get to my share screen. Let me make sure I've got this all set up properly. Oops. Tech Freaks, if you're on, Herbert D's going to work for Tesla. Is that true? I haven't seen any proof of that yet. I would love it, but I haven't seen anything yet. So let's see. All right, that's the first one. All right, here we go. So I just got to get to the screen share portion of this, which apparently I cannot find right now. Nope. Give me one hot second, folks. I had it set up and then it went away. So how's everybody's afternoon going? How's everybody's weekend going? Good? All right, let me see here. All right, let's see. Screen share. There we go. Beautiful. Entire screen. All right, so looking at this first chart here, I'm actually going to get to, which was the one. So looking at stats, so just going through, like a relatively quick Google search, you're going to find several articles about filling gaps, and there's a lot of different ways to get into it, and there's a few different types of gaps. There's common gaps. Common gaps are it's just trendless, as they're stating on here, is just trendless gaps that kind of just show up, and they can happen. And for me, just so you guys know, for me, when I'm looking at gaps, it is it's on the daily chart. So I'm looking at the daily chart normally. Gaps can happen on all the different charts, but for me and for the purposes of today, it is going to be more about the day chart. Then there's the breakaway gaps. Now, the breakaway gaps are similar to what we just saw recently with Tesla. And let me get to that. So looking at the Tesla chart here, let me see, I'll drag this up. So looking at to where we were, so this here was consolidation, and then we saw the breakaway gap from that consolidation. So that's another one of those. And then there's continuation runaway gaps. That's like when you're on an upward trend and you just keep making gap after gap after gap on the way up as you're trending up. And then there's exhaustion gaps, which are similar to breakaway gaps, but on the other side of things. Like you're coming down and you end up getting that breakaway, like, all right, we're tired of coming down, we're going to break up now. And so getting into here, let me see which one, because two of these were explaining the 9 out of 10 gaps. So I wanted to get to that and show you guys first. And then I'll show you guys how I actually find the gaps myself, so I can just at least mark them down. For me, I'll show you guys what I do. I just go to Yahoo. Hilarious, I'm using Yahoo for it, but it gives me fast information, and I like the way it's laid out. Now, let me see here. Do they always get filled? I love the ads. So this here, he's explaining The way that he breaks it down is it's not always about gap ups and gaps down. So his whole study he did here was on gap ups, not gap downs, because gap downs trend a little bit differently. And if you've got a growth company like Tesla, I don't really pay attention to gap downs as much. I see them, for a near-term thing, but long-term, if you're expecting the company to continue growing, you're obviously going to fill those gaps up at some point. It's more about, are we going to pull back down to fill the gaps lower before we go up to fill those gaps on the way back up? Sorry, I'm running through the comments really quick. I don't mean to ignore you guys in the comments. I'm just wanted to get into the information here, and then I'll definitely check out all the questions you guys have. So let me see. So yeah, so his conclusion, gap ups are by 91.4% chance. So 9 out of 10 times gaps are getting filled. And so he breaks down, and I won't go through the entire thing with you, but I do have links to all of these articles and studies down in the description if you guys want to check them out and read through them entirely yourself. But going back, and he's got stuff dated back 24 years that he went through to study all of these gaps that were created all along the way, and all of these studies did involve day charts, which is why I used them in my reference, because that's how I go through it, is studying on the day charts. Let me see here. Yep, so here's another one. Can gaps go unfilled? Yep, it's noting that roughly 9 out of 10 gaps get filled eventually. Now, the thing is when it says eventually, they do say sometimes it can take years to get these gaps to fill. I don't tend to think that a stock like Tesla is going to take years to fill a gap. However, we had, 6 to 8 months go by before we did fill some gaps on the way back down. So that did happen in the past. We do have a gap that goes down to 579. And whether that gets filled or not, I don't know. Again, it's been a long time. But this is one of those things that I just put a mental note. And again, I know based on the studies that people have done on historical values that gaps do fill 9 out of 10 times. So I just make a note of what gaps exist. And when I start to see trends moving in one direction or the other, I start to bring those gaps back into light and say, all right, are we trending in that direction? Is there enough signal information telling me that we could potentially fill this gap? So that's why I just present them to you guys as options. Again, they don't always have to fill. There's a lot of different types. And it's just one of those little pieces that I keep on the side. So getting to Yahoo. So this is how I check it. So like this one here, I went back to November 4th because that was the last gap from long time ago. I think it's November 20th. I'm not going to go all the way back there, but there was a huge gap that was filled. So the way I look at it here on Yahoo is I look at the close and the open, and then the highs and lows. So I look at the close first. So what I'm trending here, so if I'm going to go back to the 742 gap that we have, so here's 742.50. So then I look at the next day. Okay, so the next day open was 765. So we have this gap from 742 to 765. So then I look at the course of the day. Did we come back and fill to 742? We did not. So then I can continue to go up and look, did we at any point after then hit 742? And we did not. So I'm constantly looking at the lows of the day, because the low during the course of the day is what could fill that gap. And so after 742.50, no days after that hit a low of 742. So that means we have a gap down to 742.50. And now for you guys, because I haven't done this myself yet, and I figured I would do it live with you, is I'm going to start making note of any other gaps that we have created since that 742 gap. We've had quite a run the last week or so. So we'll track this. And so looking here, so we've got 815 jumps to 828. And does it pull back to that 815 mark? Yep. So we did fill that gap by doing 812. So then we closed at 816. No gap here. So then we closed at 805. We had a down gap, but we, of course, have filled that since. So 776, we jumped up to 791. Did we come down and fill that? Nope. So we have a gap down to 776.58 as well. So I'm going to make note of that. So we've got the 776.58 gap that did not get filled anywhere. So next one I'm looking at is 824. We jumped up to 840, but yep, we filled that gap here. Then 842, no gap there. So as of right now, unless I missed something, and you guys can definitely double check my work on this and go further back. I have gone further back, and there weren't any other gaps before 742.50, unless you go all the way back to November of 2020, which is the last gap way back then. So, you guys can check all that and definitely call me out if I missed something along the way. I am not perfect by any means. So it looks like right now, the most recent gaps we have are very recent. So we've got the 742.50 and the 776.58. So these are the two levels that I am going to be paying attention to. Now, over the course of this entire year, we have filled every single gap that Tesla has made. So yes, it's 9 out of 10 times, but at this point, we're well past that. Now, granted, in the past, there have been times where we've had massive jumps in the stock price and never came back to fill them. They don't have to. Again, there's that 1 out of 10 chance it's not going to fill, but more often than not, it does. So looking at the charts themselves, so it's hard for me to tell on here. So this is why I don't always go by this, because it's hard to see, but you can physically see if I zoom in here. So you can actually see the gap. This is what a gap looks like on a candlestick chart. And so when it comes to the wicks, it's hard to tell, but you can see like on the following day, when you've got a wick that pulls down and fills. So that means that it did get filled on that. And so looking at all my trend lines here, we're looking at a bunch of different resistance levels, and I'll move this up here. So, as we were talking yesterday, so this is another piece of the charting that I go by, looking at the different resistance levels that we've got. So 1029, right around that 1029 mark is a good strong resistance and support. So when I'm looking at the candlestick chart, like right here, we've had a lot of, support and resistance at the same line. And when you go back to the charts and you see it happen time and time again, so it went all the way back to the last time we were there. So this is another piece of the chart that I look at for resistance and support levels. And so, when I'm tracking it over the course of a day, I'll put it on there. And then when I see it happen repeatedly, I'll bold the lines out so I can see that, it's stronger. So a light blue line will mean that, we had a resistance or a support. And then if it gets, brighter, it just means it's stronger resistance and support. Sorry, I'm going through your comments right now. Let me see here. Yes, I'm having a good weekend. Let's get it. Let me see. No, I'm not talking about Google. I'm talking about Tesla today. So I apologize if you thought we were talking about Google. I do own Google. I like Google as a company going forward. So it's fantastic. I mean, you're not wrong. So eventually this, and so one of the reasons why gaps end up getting filled, and it's in one of these articles. Let me jump back. I'm not sure which one it is, and I apologize, but there's a lot of information in all of these articles. And one of them was explaining how it's like a magnet. And so when you have a gap that gets filled, that magnet is continuously trying to pull the stock price down to get that magnet to meet before it releases, and then it can go up again. So sometimes, again, that 1 out of 10 times it's going to break that magnet's pull, but more often than not, it's pulling it back down. And a lot of times it's because it's the algorithms, and the algorithms are set by humans, but the algorithms themselves in all of these computers and algorithms that are trading thousands of trades per second. It's at a pace that none of us can physically do ourselves. But because of the fact that it's trading so fast and so frequent, when the mathematical algorithms see a gap, see an area of data that is not filled, it wants to fill that data in. It's like a coloring book. You just want to fill in that shade in that area to make sure that, yes, now it is complete. We can move on to the next step. That's basically how it works. And because of the algorithms, and algorithms have been around for a long time. I don't even know when they started doing the computer trading. I think it was NASDAQ started it in the 70s. I could totally be wrong on that. but from something I watched, I think on Netflix once, it was explaining it. And the more and more we use computers to do the trading for us, the more this is going to happen. And it's all just mathematical equations that get put in there. And then those mathematical equations are swayed by whatever information the people who write the algorithms want it to have. So for instance, looking at YouTube, trying to hit algorithms when it comes to putting up videos on the channel to get people to see it, it's keywords that could get put in there. So the algorithms for the market work no different. So you've got the algorithms in the market, and they're going to put keywords and say, okay, well, these keywords are going to cause a sell or a buy. And then as soon as those words start hitting headlines in newspapers, the social media, mainstream media, you're going to see the stock move one way or the other. So yes, it's computers that trade it, but it's humans that put in the keywords that are going to swing the stocks one way or the other. Sorry, here, let me see. With all the catalysts coming for Tesla next few months, where the gap won't fill, and we're just going to. So it's totally possible. Again, I have seen previously, nothing this year because of the type of market we're in. But if you go back to, I think I'm almost positive any of the gaps that we created coming out of the COVID crash, most of those did not fill. I'd have to go back and actually check on that. But I think that was the same held true for a lot of companies. Many of them didn't fill. Now, there are a lot of high growth companies that are not profitable right now that did fill it, because we have seen many levels come down to pre-COVID levels. And Tesla is not one of them. A lot of the larger, more solid companies did not get down that far. So whether they're going to or not, I don't know. Again, there's a lot of discussion going back and forth about whether we've crossed that 4,000 threshold for the S&P and we're going to bounce off of it and stay above it. And others are saying we are going to come down below it and fall back to 3,400 in the S&P. Again, nobody knows the future. If we pull down to 3,400 in the S&P, totally possible that some of these gaps even further down could get filled. Again, I don't know, but that's again also why I just make note of all of these gaps. So looking at it now, if we do end up staying above that 4,000 level for the S&P, you could absolutely be right. The 742 maybe doesn't get filled. Maybe we just fill that 776 gap and bounce off of that. So what I do is I like to follow the trends, and the trends all year long have been higher gaps that we have been creating along the way. And as we have created these higher gaps along the way, that has denoted a higher low all along the way. Now, looking at a one-year chart, and I'll see if I can get it out for you guys in an actual relatively decent visible manner. Where did it go? There we go. I don't like the way this one breaks it down. I don't know if I can get a good chart for you guys on this, but let me see. I'm going to go back to basically a year ago. So if you're paying attention to this from about a year ago, you can see that we have been making lower highs and lower lows for a long time, for basically the last year. Since October, since we had gotten Q3 earnings of last year, we had hit, let me try to get this better for you guys. I apologize, this isn't very good, but you can see that we have been trending down for the last year, basically on what is called a dead cat bounce. This is down, bouncing, bouncing, bouncing. That's a dead cat bounce. And so looking at how we've made these lower highs and lower lows along the way would say that we were on a massive downward trend. And we certainly were. We all felt it all year long. But now we are at a point where we've hit this lower low and we're kind of consolidating here. So the next step to pay attention to is, all right, we've been trending up nicely. Whereas if you look at these last dead cat bounces, there was no upward trend in it at all. Like if there was, it was very short-lived and then ended up falling off again. Here we have been now creating higher lows and higher highs, and now we've broken out. So that's where we're paying attention to now. And so now I want to make sure that this breakout that we created is not going to end up collapsing. And this is where that discussion about the S&P 4,000 or 3,400 comes in. Because if this can sustain, and even if we do have a sell-off and pullback, are we going to stay above this low level here? So Currently, the low right here is the 672, but looking at the gap at the 742 is what I'm really paying attention to. So if we can hold and maintain that area and then build off of it, that's going to be important. So we're kind of in an awkward place right now where there's not really a trend. Like there's a straight upward trend, which is why I've got this channel here, but we're not creating any strong support levels at the moment. So I'm waiting for a cool off and a consolidation again, similar to what we had seen here. And so once I see that consolidation, then I'll say, okay, we're now at a point where we're finding some solid support and resistance levels. And that's at that point where a lot of times that's where big money will sit. So now when we saw this giant breakout coming here, I discussed with a few of you guys in the comments about how usually big money is what's going to act as that support level. So when we do pull back, and I do anticipate a pullback at some point, it's just natural and it's healthy for the stock, seeing as the RSI is over 70 at the moment. So it's healthy for the stock. So if we pull back, not a big deal. The important thing to watch is how far back do we pull? Where do we find that support level? Because that support level tells me that that's where big money is sitting. And if big money is going to hold at that level, then we will be able to hold and build off of it. So again, these are just things I'm paying attention to. Nobody knows the future. Nobody knows if we are going to stay at this level and keep going up, or if we're going to break down into another dead cat bounce. But by following this, I can at least see patterns to say there's a better chance that we do stay above it than we do fall below it. So again, those are just the things that I pay attention to. So again, maybe we don't fill that gap all the way down to 742. We have a lot of great catalysts coming up. We've got the annual shareholder meeting. If CPI data comes in on the 10th, that shows that we are definitely trending downward with inflation. Another great catalyst there. Then we've got the split, which again, this Thursday, we're going to find out the information on the split as far as to, are we actually going to split, or maybe what the date is going to be on it. Then we've got AI Day 2 coming up, and then I have no doubt that Q3 production and delivery numbers are going to be a nice surprise. And then after that, we've got earnings. So, and then we've got, potential S&P upgrade for credit rating, lots of amazing catalysts. So my mentality, which is why I have been dollar cost averaging all along, is I will invest my money based on the fundamentals of the stock rather than the price of the stock. I look out because I plan on holding the stock for a minimum of 10 years. So I am going to be looking out. I see here. Sorry. So I'm going to be looking out, 10 years, and I say, all right, my price target for 10 years out is around $12,000. So do I think at this point, $891 is going to give me a good return on my investment? That answer is yes. And so I'm going to dollar cost average until we get to a point where I don't think that I'm going to get a good enough return on that investment from my daily dollar cost averaging. That's just how it is for me. And because of the fact that we don't know where the stock price is going every day, I choose to dollar cost average rather than either dump all my money in or try to time the market for a deeper bottom. I don't know. Nobody knows the future. So I don't know if we're going to fall even further. I don't know if we're going to continue running up from here. So if I dollar cost average and I just put $20 every day into Tesla, I'm going to win on both ends. Let me see. So if there's no sellers at the low gap price, it gets filled because, again, it's algorithm trading. And the algorithms don't care whether there's a buyer or a seller. It literally says, all right, well, this is the data that we have. We need to buy or sell based on that data. So, then all of a sudden, big money who controls the algorithms can go in there and be like, you know what? I want to sell today. So they put it in there and the algorithms will automatically sell down to that price. And you got to remember that there's market manipulators who would say, hey, you know what? At this point, I want to buy Tesla at 742. We want to clean out some paper hand retailers who maybe just bought, basically steal their money, get them to sell out so we can buy their shares and have that stock price come down because I want to buy at 742. So it's not so much as sellers down to that price as much as it is buyers. And you got to remember that big money will hedge on both ends of this game. So they may have, long-term positions that are planning on going up, but if they want to add to their long-term positions at 742, they'll sell out some of their hedge money that they've got to draw the price down to that. So they're their own sellers that are going to bring it down. And as they sell their hedging positions, it's going to cause other sell orders to trigger, which is then going to cause the stock to collapse down even further to that point where the gap fills. Sold Tesla shares in April calls, market crashed. Mhm. Yeah, I mean, this year was definitely a hard year. So I'm glad you were able to get those shares back for sure. I don't do options yet. Once the stock splits, I'll be definitely looking into doing options. But options and definitely margin. If you guys are on margin, just be careful. I'm not one to tell you what you can or can't do, but in these times, margin could be very dangerous. Yeah, that was another one too. I had seen that also, Denise, was Kathy Wood. And looking at Kathy, a lot of people give her a hard time about things, but my goodness, when Tesla was coming down, she sold out a bunch of shares. People gave her crap for it, and then it just continued to sell off. And then we dropped down to 620, and she started buying in around that $620 mark, and now she's selling now. So whether this means that she's anticipating this being near a top that we're going to be at or not, who knows? But she has been right in the past. So that's part of, for me, like I said, in my IRA, I had two sell orders in for 1% trailing losses at the $860 mark. So they both ended up selling around 850, because I was at that point where like that's just what I wanted to do for my portfolio, and I was looking for anticipating that 742 gap is going to get filled, and I will buy those two shares back in down at that level. So I mean, whether she's right or not on this, we don't know. Again, have to remember that with Kathy and all other funds out there, they basically set a limit for their stock. So let's say they say they are allotted to have 10% of their portfolio in Tesla. And so when it crosses that threshold, they clean and trim some of it off. And when Tesla's on a big run like it has been for the last month, it's up 32% in July. So when you go on a massive run like that and it outruns and outperforms the rest of your portfolio, you are just naturally going to be at a much higher percentage, and they may just be trimming. Again, we don't know, but last time she had done this, it was a signal that we were starting to head lower. Yes, and Cyberman, that is a good point too. She's in a rough place right now. She still has a strong conviction on the future with all the positions that she holds. But as a fund manager, her cash inflows have not been what they used to be over the last few years. So she's got to do what she can to stay afloat, and having Tesla pop like it did is a good opportunity for her to take some profits and be able to make her accounts happy. Nick, I don't place now. Just to be clear on it, Nick, I apologize if it sounds like I put all of my eggs in that basket. This is just one of the pieces that I look at. For me, charting and following the gaps, I would say is probably maybe like 25% of what I follow. I also go by sentiment in the market. I go by what news is going on. I follow the fundamentals of Tesla itself. So this is just one of the pieces that I follow. And so I don't, place all of my trades based on this. But when I'm following sentiment and I'm following all the news and the fundamentals of a company, and then I try to see what the stock price is going to do based off of this information, that's what I look at. And for me, I'm a long-term investor. I don't do a lot of near-term trading, but I do track all of these things as knowledge and education for myself. And so I have learned that, these have come true. So if I'm seeing that these gaps do get filled, if I'm looking to add extra and maybe deploy some of my extra cash into the stock, I'll look at the gaps and say, hey, what place do I want to add money into? And while long term, I think any price at this point right now is good. When I'm looking long term, or when I'm looking, at a place where I can maybe get a better return on my investment and add extra, that's when I'll take a look at the gaps and say, hey, I want to add more money. I'm over 10% cash. Where can I add it? Well, right now, looking at the charts, Tesla by the RSI is overbought. We're at 70.89 on the RSI. And then I'm looking at the gaps, and we've got a gap that goes down to 742 and a gap that goes down to 776. So yes, we are due for a pullback. Where will we pull back to? That's the point where I want to buy in and add my extra cash to. That's the one of the reasons why I follow the charts. But I definitely do not place huge value in it, other than for reasons like that and just as a piece. It's not stressing at all, by any means. As a matter of fact, if the stock pulls back, I'll be super excited because I have a strong conviction in the the future of the company. I think we're going to see a very strong Q3, and I think we're going to get a surprise Q4. Personally, I think the company is going to break 500,000 vehicles delivered in Q4. I think we're going to get a massive surprise in Q4, and that's going to cause that, because we're going to get that January 2nd of next year. That could be the trigger that pushes us to all-time highs again if we don't hit it before then. And if we do hit it before then, that'll push us to even higher all-time highs. So that's my personal opinion on that. If things change, obviously, I will change my insights on that. But as of right now, based on the information we have, I have a feeling that's what we are going to see. So again, CPI moving. I just follow the macro because the macro does. Right now, it has been weighing. Tesla has broken away for the first time all year from the macro environment. However, the macro was still significant. So if we pull back, I think, as I had mentioned it before, we could break out for a brief period of time from the macro, and then I think we'll channel back into it at some point. So right now, Tesla's just trying to find its new channel that it will ride with the macro environment. But we have a lot of positive macro news going on at the moment, so that's also very bullish. I will, just because this is going to be a shorter live stream today, I will definitely get into that because I do track other stocks as well. So if you want to just let me know in the comments what you want to know about Google and Apple, I will definitely make a live stream for that, and I'll let you guys know about it. Because I do own Google. I did sell out of my Apple earlier this year to make some profits and free up some cash, but I do like Apple long term as well. So both very solid companies, and I will definitely get into those in the future. Let's see. Let's see, Craig. You're very welcome, Craig. I appreciate that. And that's one of the things that I appreciate from you guys is giving me that feedback. If you want more information or you want me to get into that stuff, let me know. And again, I'm just learning how to do some of the technological things, but I'm glad I was able to provide you with that. Let me see. With more retail investors, Tesla trading volatility and ability to trade before. So yeah, and that's another point too is Tesla does have more retail investors than any large cap company out there right now. It's significant. And part of that is because they do not have investor grade rating yet for their credit rating. When that happens, I think we might see the switch and there might be more big money in the stock. Now, that's not going to create situations where the gaps may fill more or not. That I don't know. But a lot of times it's because investor grade rating means that institutions, like where you've got your 401k, more of those companies will be investing in Tesla. So that could slow down the volatility of the stock. That could potentially stop the swings as big as they are. Right now, the beta is over 2. That could bring the beta down. So at that point, the gaps may not be as massive. We may not see gap ups because like if you're looking at a Google and an Apple, you don't see gaps nearly as often or as large as the ones we see for Tesla. So that could minimize those gaps. So it just kind of smooths things out over time. That's really what that's going to help with. But and it's crazy because while there's more percentage of retail investors that are in Tesla, retail investors, I don't know if Ron Barron is actually considered a retail investor. He has his own fund, but he is a massive investor. And I think Leo is considered a retail investor also. He's like the number 4 or number 5 shareholder in the company. So, even retail investors have a massive share allotment of the company. So, even though it's heavily owned by retail investors, the majority of those retailers are, 2 or 3 people. So pattern wise, Tesla does break a lot of patterns. That is definitely true. Historically, though, if you're looking at it like, we're watching the dead cat bounces, it still does end up following it. But a lot of growth companies will end up breaking trends and they don't actually follow specific trends. Like we did see the consolidation. So that was nice. I've seen plenty of consolidation in the past. We've seen bull wedges get formed. And so it still does track and trend along with the same patterns. It does, but it does tend to break away more often, I have seen, than larger cap companies. But it's going to follow these trends. We see patterns. I'll go back. Let me see if I even tracked it further back here. So I mean, like there's still some wedge patterns going all the way back to March. This is when we were just on our massive tear, you know, back in 2020 after the S&P inclusion. So looking at this, this is just a straight vertical run right here. So there weren't any patterns. I mean, there are some patterns if you go to the minute charts or the hour charts, you can see patterns within that. So it still does follow patterns. It just tends to break away from the patterns more often. Yes, well, definitely just buy and hold. And honestly, so for me, it's like I have in my head two specific years to track. 2025, I think, is going to be a massive year for Tesla. That's really going to determine where, legacy auto and all the competition, is it going to survive? Who is going to be lasting the rest of the decade? Where is Tesla? That's basically going to be them getting their massive foothold and will dictate kind of how the rest of the decade is going to play out. Robo taxis, where are we at with that? What kind of footing has that gotten? And then 2030 is where AI is going to come in. And that's, kind of hey, have they solved AI? Is Optimus really going to make a huge difference like we think it is? And that's going to be the next massive catalyst for the whole entire next decade. So those are the two big years that I'm paying attention to. I still don't plan on selling any unless, of course, we get some catastrophic information or all of a sudden Optimus and AI just go kaput, and then that may change my mind. But my valuation model is based on just EVs at the moment. So going to 2030, I'm still happy with those numbers. Options, I will let you guys know about options when I learn. I am not one to educate or share information with anybody for stuff that I don't know. And if I do know information and I'm just a beginner at it, like some of the things I have shared with you guys, I'm just a beginner, so I will let you guys know that. But options, I do not know anything about. I don't even want to give any information about it, even as speculation, because I honestly don't know enough about options yet to be able to educate anybody on them. Let me see. Well, nice. That was a wise use of your stimulus. Some people that I know went out and bought themselves a new iPhone, or they bought themselves a new purse, and I was like, oh, great. How much did you get for the return on your investment on that? Oh, that's right, nothing. Well done, William. Willie. Sorry, Willie. That's my dad's name. Um, yeah. I'm really anticipating a strong second half for 2022. And you got to remember, again, there's always ups and downs, and that's totally natural and healthy for the stock. I do health and fitness, and taking a break to let your body recover and heal is a good thing. And it's similar to like we see this breakout for Tesla. So to let it cool off and heal a little bit, that's good. That is actually a good thing for the stock. So it lets it cool off, lets us find a nice, good, solid foundation again to then be able to build off of that new foundation. And so I think anytime we get that pullback, it is never, unless the reason it's pulling back is for some catastrophic fundamental issues with the company. So as long as it's just pulling back because it's trending down with the macro environment, or it's just cooling off a little bit, great sign and a great time to buy. So again, Nick, going back to your discussion about following, putting a lot of value into the gaps, it's just the trends I follow and just seeing it cooling off a little bit. That's just one of the pieces that I use to help find that. Let me see. Thanks for everybody being on today. This is awesome. I know it was a last minute thing, so this is good. Let's just running through the comments really quick, see if I missed anything here. Oh, this is a good one. Let's see. Tariq, let me see. As per prediction of Tesla bulls, including me, yep, till last year, Tesla should have been around 1,700 by now. Do you think if the macro conditions of Tesla shoot up like old times? Yes and no. And yes, I did not anticipate the macro environment being as heavy as it was this year. So definitely, I thought we were going to be closer to 2,000 at this mark than we are right now, for sure. And I think right now it's really a matter of, whereas Tesla finding its footing is very important, the macro still needs to. The macro is in a lot of turmoil. We're kind of all over the place. We do see some positive trends going on. So I think it's going to take us to see inflation coming back down to the levels that the Fed wants it to be at. The Fed wants inflation to be between 2 to 3% and interest rates about the same, keeping it balanced. It constantly fluctuates, but as long as it's around that level, then I think we have a healthy economy to be able to grow off of. So right now, seeing as where Tesla is trading, I don't know if we're actually going to be able to shoot up like old times and break out of this until we do really truly find that solid bottom for the macro environment, for the economy. Once we find that, then we can definitely shoot back up. So I think right now we had a couple overhangs from before. We had Twitter that was holding us down because people were wondering, is Elon going to have to sell more shares? Because people don't want to buy in if Elon's going to sell and bring the stock price down. Totally understandable for people who are looking more as a short-term play or something of that nature. So I think we will be able to shoot up like old times. It's just going to take the macro that's going to hold us. And just from what I have seen going on this year, again, we broke out now, but we're going to end up finding, a trend level. And we've been trading in these ranges. So before the range was 620 to 770, and then we consolidated, as we see here, though that was the range. So 620, 770, and then we consolidated in on this. So that's what I'm going to look for next, is finding that next up. So I think we're going to end up just finding these trading ranges and shifting our way up. So to see the breakout, how we did, is a nice glimpse of what could potentially happen, because this is reminiscent of what we had in the past. Running up like we did in 2020, not normal for sure. That's probably why we saw as big of a sell-off as we did this year, down 50% from all-time highs. But at the same time, we could also go back in the same direction. And the reason there's such a differing opinion of stock price for Tesla right now is, looking at basically all bulls and bears, both feel the same way. Tesla is a very strong company fundamentally. However, some of them are going to put, a PE ratio in it based on, legacy auto, like around an 8, while others, like myself, are going to put a higher PE ratio around the 95 mark. And then I kind of trend that down over the decade as we grow larger. But by doing that, that's going to put such a large gap in the different price targets that we have out there. So again, looking at fundamentals, most everyone, all the analysts are seeing fundamentally it's a strong company, but how do you value it? And then you go into the future and you think, well, what do we think the company is going to bring in the future? Do we think that we are going to see, AI come to reality? Do we think that energy is really going to take off? Do we really think that FSD is going to get solved? And the more pieces of this puzzle that you feel are going to get solved, the higher PE you're going to put on the stock. Thereby, you think it's going to have a higher price target in the future. Thereby, you think that right now it could be priced in. Some people right now think that $891 is too much of the future already priced in, whereas others don't think it's enough priced in. So that's why there's such a massive discrepancy in the stock price and price targets, and why sometimes we can see it run and sometimes it doesn't, because we have people pulling in both directions. And again, a lot of these analysts are working for companies who are, looking at big money, and they use the algorithms. So we've got algorithms that are both battling each other as well. So again, this is also why, as a Tesla long-term investor, it is a roller coaster ride for sure, but that's why I follow the long-term trends. And despite the near-term stock price volatility, long-term, we are still heading on that upward trend. Yeah, Willie, that's definitely fighting the FUD. It's funny, over on Twitter, if you guys are over on Twitter, I'm over there at Oracle Tim 1, and it's one of those things where somebody made a nice chart of all of the different people to follow on YouTube, on Twitter for Tesla. And honestly, that is Tesla's PR team. We have so many of us in this community that, are so, dialed in on Tesla and so confident and positive about it that, we see such positive things. And it's great to see this whole community basically act as the PR team. Yes, yeah, Tesla was definitely disconnected over those 2 years for sure. And I think that's a big reason why we saw the pullback. I mean, of course, the entire market saw the pullback. It's not like Tesla was any different. But when you run that much further ahead of the market and we get a bear market right afterwards, just anticipate getting pulled back into the macro. So, Tesla being a growth company is going to act like an Amazon, Google, and Apple did over the last 10 years. It is going to run away from the macro once we get back to a bull market, which at $923 is technically a bull market for Tesla. I have to check to see what it would be for the S&P and NASDAQ. So once the indices and Tesla do get to a bull market, that, Tariq, I think is when we're going to see that runaway stock again, and we'll see massive outperformance. Until then, we're probably going to trend right around here. Let me see. Yes, totally agree. Let me see. Super Bowl. Ooh, that's interesting. I did not realize that that's when. Yeah, so it will be right around there. And if we remember from last Super Bowl, that Tesla did very well with all the advertising that everyone else did for them. It was awesome. Uh, my share count for 20. Ooh, I don't even know. I haven't gone out that far to. I'm just adding as much as I can. I'm trying, if possible, to get to 100 by the end of this year post split. So if I get more money, I've got to dump the majority of my money into. I've got to dump the majority of my money into my house that I'm buying, because that's going to generate more cash for me, so that I can invest more into Tesla. But after that, I'll be able to dump more in. But right now, I just have other priorities for my cash, although Tesla is like number 2 priority. Yep, that's it. It's funny. I see a lot of people out there asking for more FUD to bring the stock price down to buy it cheaper, and that is what could happen. If we get a massive lot of FUD that comes out there and brings the stock price down, maybe we fill that gap, and then I'll buy in heavier. I don't know. Either way, because I feel the stock is going to do so well long term, I am totally good with a pullback and any FUD that's out there. It just drives me nuts, because I want to make sure that people who don't understand the reality and the truth of the situation do know the truth. That is very important. I hate misinformation, and it goes both ways, because there are some people out there who are spreading misinformation on the bullish side of things, and that does need to get reeled in also. You got to be realistic about it. Let me see. Wow, lots of comments today. This is awesome. Electric Corvette that caught fire. I did not. And I heard, honestly, I didn't even know the electric Corvette was out yet. Now, that's maybe because I don't follow GM as heavily. I didn't realize it was out, but I did not hear about that. Now, again, it's not nice to hear that it caught fire, but it's nice to see that Tesla's not the only one that's making news when it comes to their electric vehicles catching fire. And that's one of the FUD things that, I like to make sure people are corrected with are, sure, it caught fire, but the reason you don't hear about ICE vehicles on the news all the time catching fire is because they're just the norm. Like normally, like you're going to drive down the highway, and how often, you just hear randomly in the traffic section of the news where they're like, oh yeah, there's traffic over here because of a car fire on the side of the road. It doesn't make massive headlines. It just makes the traffic news. And, the only reason that Tesla makes it in is because it's Tesla. And that I think is crazy, but it's a matter of correcting people to make them realize you're only hearing about it because it's out of the norm, because EVs are new, and ICE vehicles are just commonplace, and ICE vehicle fires are just norm. Let me see. Wrecking Ball, thank you for the super chat. I appreciate that. Yeah, and so for me, oh man, I was having a conversation with someone the other day about selling, because I did sell in my IRA. I sold my 2 shares, but I got to tell you how uncomfortable it was to see it trigger. Like I put the sell order in there anticipating it was going to go higher, and then they both almost sold immediately. I was like, oh, like it definitely didn't feel right. I am not going to sell in my main portfolio at all. I purposely do it in my IRA with small amounts of it, just to swing, because I do know that the stock does swing. It's very volatile, so it can swing a lot. So I did it to swing, and it's tax free. So that's the only reason I did it there, but still did not feel comfortable. So I totally understand that. Let's see. Yeah, emotions, man. That's another big piece is, and that's one of the things that, and I appreciate all of you guys who were with me back when Elon was selling his shares, is man, emotions, they can really grab a hold of you. So being able to find a system that works for you, and and I basically worked through my system with all of you guys all along. You saw me and learned with me for those of you who have been with me from the beginning, is I have learned my strategy and my plan. And by following that plan, it takes my emotions out entirely. And it's phenomenal because now I don't even have to worry about emotions. If, because I have my plan set, if the stock runs and breaks out like it did, I'm super excited because we're going green and we haven't all year. But if we pull back like we had been all year, I was still happy because I'm like, ooh, I can buy more for less. Because this year I mentally set myself to accumulate as many shares as possible. And I have conviction and faith that the stock is going to run much higher in the future. So the lower price I can buy it for, the better, because I have a feeling we are going to get back to those levels and we'll get there within the next year. So yeah, it was not easy to take emotions out, but my goodness, once I got there, it was great. Thank you, Cyboman, for the super sticker. I appreciate that. Yes, 5,000 subs. Actually, let me check because oh my God. So, speaking of resistance levels, I hit one myself. I was with my son today and it was awesome because I was trending up to that 5,000. And with him, I was like, oh, 49.97, 49.98, 49.99. And then I bounced off and lost a couple because, YouTube will clear some bots out. I'm like, oh man, I really wanted to hit it while I was with him. So it was a little bit of a disappointment, but that's okay because I originally wanted to hit it. Yep. And there it is, 5,000 on the dot. Thank you, Vinny, for pointing that out. And thank you, everyone, for all of your support. 5,000 was my first major goal. So that was awesome. So thank you all. And you guys all get to be here when we achieve it live. This is great. Let me see what else we got. Yes, thank you, Wrecking Ball. And so my next goal is going to be 25,000, but I want to hit those milestones of the 10, 15, and 20,000 along the way as well. And we'll definitely celebrate at that. Hey, that's a great question. And I think that comes down to how much you value it. So very much like, discussions that they have with Bitcoin, there is a limited number of Bitcoin that can be mined. We still have not hit that number yet, but as soon as we hit that number, that means it is a set number. So that value can go up or down based upon how much people, feel it. And usually when there's a limited number, it would tend to keep the value higher versus obviously, like you said, the US dollar, the more you print, the less the value should be. But that also goes back to why the Fed wants to make sure that we have a 2 to 3% interest rate, because by doing that, it creates that 2 to 3% inflation. So you can get away with printing 2 to 3% more dollars every single year to get it into circulation and keep things balanced. There's a lot of other numbers. That was a very broad-based explanation of it, but you can, dive in even further with numbers and to explain that when it comes to supply, demand, and things. But that really comes down to, the value of it. So yeah, that's a great point is, Lester R. But now, of course, we're going to have more Tesla shares coming out most likely this week. But then, of course, you're going to split the stocks. So you'll have more shares worth less, but the value is exactly the same. So do guys have to remember that if you're not aware, when you get a stock split, the value of the stock does not change at all. It is a simple multiplication and division of it. So you're going to have, 3 times more shares and 1/3 the stock price. The value stays exactly the same. And unfortunately, that does not work with the dollar. If you rip a dollar in half, it's not going to be worth more. Let's see. Top 5 catalysts for the second half. So obviously the split is going to be a big one, but honestly, when it comes to the split, I don't know how much it's going to move it because we already know about it. We got the rumors back in, I think it was March. Gosh, it was a long time ago. So we got the rumors back then about the stock split. That moved it a little bit. Then, of course, we just trended with the macro. So at this point, I think we'll get a little bit of a run into the split, but we already know it's coming. It's just a matter of timing. So I think the biggest catalysts are going to be any information we get from AI Day 2 about progress. My thoughts, seeing as they're going to be releasing FSD to all of North America by the end of the year, I have a feeling they're going to announce at AI Day 2 that Dojo is up and running. Because in order to take and filter all of that data coming in from all of the vehicles in North America, they're going to need some massive compute power, and that's where Dojo is going to come in. So I have a feeling they're going to announce that Dojo is up and running. That could be a huge catalyst. Q3 production and delivery numbers are going to be a massive catalyst as well. The investor grade rating for credit is going to be another massive catalyst. The Dow inclusion is a possibility. I don't know if Tesla will qualify for it after this split, but if that's the case and we do get included, that will move it very much like we got moved by the S&P inclusion. Man, a fifth catalyst. Gosh, I mean, the other ones, like there's a lot of catalysts that are out there. And I think most of the catalysts at this point are going to be, like when Tesla, when they announce new factories, that will be another big catalyst. So they're very tight-lipped on that. But I have a feeling they've got factories in the works for the Eastern US or Canada. They've got factories in the works for the UK, Japan, somewhere in Eastern Asia. I don't know if they're going to do another one in China or if they're going to do one in Indonesia. I think Indonesia is at the top of my list for the area. So I think announcements of those factories are going to be the big pieces and catalysts for the rest of the year. Yeah. Shares now, I am at 11, almost 11, 10 and a half. So I wanted to get to 10 before the split. I hit that. And now, because I've been adding more and more to my portfolio on a daily basis, I'm getting closer. So I'm now shooting for 12. And if the split is not going to be, end of August, beginning of September, and it's going to be later, then I'll add more. But I have a feeling I should be able to get to at least 12 by the time we split. So I'm very excited about my growth there. Let me see. 40K rebate, that's actually the big one. So I am waiting, and I've had a lot of discussions with many of you guys in the comments because I'm affected by it as well with my Model Y. And my Model Y coming out, my delivery date is slated for November 9th to January 4th. So I need to find out if things are retroactive because I'm getting mixed information about whether I can do retroactive because I placed my order technically this year. I originally placed it on my birthday last year in November. But then when I re-upped it and I changed the settings and put FSD on and then took it off, it changed my technical order date to March. So I technically ordered this year. So I don't know if it's going to go by order date or if it's going to go by delivery date. I've also heard stuff about the Model Y coming in, talking about how it's technically a crossover and won't qualify as an SUV. So a lot of clarity that needs to come out of this. Supposedly we're going to be getting... sounds like the Senate is going to be looking at it this Friday, so we might actually get it passed. And then at that point, we can dive in and find the real information from the finalized bill. I don't want to really dive in now until we get the finalized bill. But when it comes to the semi-truck, sounds like that is going to do very well. Now, while we have discussed it on here, I don't think that we need this. As a taxpayer, I would much rather my tax dollars just go towards something more useful or just to pay the debt down. We don't need this bill at all. However, since it's most likely coming and we're going to get it, what things will, Tesla be able to benefit from? They're going to benefit from all of it, but the semi-trucks, that's big because previously, looking at the EV tax credit for all the regular vehicles out there, regular EVs are already starting to take over. We already see that transition happening. When it comes to, big rigs and semi-trucks like that, that is just starting. So to be able to get this credit is going to be big because it's going to end up changing and pushing that towards the EV revolution as well much faster. So I'm a big fan of that $40,000 rebate. And don't forget, it's $40,000 or 30%, whichever number is lower. So, if it's 30%, so if we're looking, so I think the semi they said is going to start at 150. So technically 30% would be about $50,000. So 40,000 would be what it's credited there. But if Tesla does end up coming down with the price on a semi, it may be less than 40,000. You're most welcome. One of the things I like to do is I like to make sure that I acknowledge everyone. Either it's here or in my comments. So if I do ever miss a comment or a question from you guys, I apologize. I really do try to get back to every single one of you guys. Let me see here. Yeah, as of right now, my 20, actually, I just updated my price targets and I share them over on Patreon first. So I don't want to give you guys all of the information yet. I am going to do a full price target breakdown probably next week. But my latest and updated price target for 2030 is, that's not the numbers I wanted. $11,009 currently. So that fluctuates a lot because the way I do my valuation model is I do specific numbers through 2025 right now. So I go about 3 years out with specific numbers. And then after that, it's just percentage growth off of that. So as we get closer, I dial in the numbers tighter, but it's really just a percentage growth because there's so much stuff after 3 years, there's so many unknown variables. It's just, I know Kathy Wood, I think goes up to 2026, but let me see. Oh, absolutely. So as of right now, when it comes to gigafactories, it's all production, production, production. That is the number one key. We've already seen this, and especially with the EV tax credit coming, because demand is so high for EVs across the board, it is vital for production to ramp up. So I have no doubt, and because thinking about how much Tesla has for free cash flow, thinking about how much money they have sitting in a giant cash pile, they're like, Uncle Scrooge with this giant vault of cash that they can swim in. And because of that, they're going to put it. So I think we may hear of 2 or 3 factories get announced by the end of the year, and also expansions. We already know that they're expanding Austin, Berlin, and Shanghai. And then we have another factory in Shanghai, which they're considering an expansion on top of the current expansion they already have. Lots of expansions already coming, and they're going to have new factories coming up as well. I think the next 3 years, by 2025, Tesla might actually have all the factories built that they want to have built as far as the gigafactories go by 2025. I think that's what's going to end up happening, and they'll continue to ramp all of those. And then what they'll end up doing is they'll probably do maybe they call them mega factories or smaller factories in some smaller localized country areas to get stuff pumped out. Like the UK might be a smaller one, Japan might be a smaller one, but I think that's what's going to end up happening. And we'll see the massive lot of factories get built by 2025. So I think we're going to see quite a few come up. And I would think that the goal is to have the majority of their gigafactories, fully ramped by 2026 or 2027, and just do the tweaking after that to see what they need. Let me see. That's a great point. I didn't even think about that when you're looking at different areas where people are living and their income levels. That's significant. But then you also remember that people living in major metropolitan areas could be utilizing robo-taxis instead. So, if people are going to be like, well, a lot of people in metropolitan areas don't own a car anyway because they're in the city and it's all mass transport. So those people would most likely end up using robo-taxis. But I know, of course, there's plenty of people in the cities who do own vehicles. But at the same time, if these people are making that kind of money, buying a vehicle of that cost isn't as much. But again, their cost of living is also significantly higher. My good friend lives in San Francisco and he makes a lot of money, but his rent is like $5,000 a month. It's absolutely insane. So it's the cost of living, right? That's the Silicon Valley cost of living. It happens. But again, you're making that kind of money. So making an investment in a vehicle of that price isn't as much hitting your wallet as it would be somebody who makes less, who could take advantage of that credit. So you know what? That's a great point. And somebody asked us before, and that's something I'm gonna have to pay attention to. And I don't know if Tesla's gonna do anything about it, is with the FSD, because adding FSD will bump the price up and over $80,000. So I don't know if Tesla's going to work it out, or maybe this is why Elon had mentioned, hey, I sense a trend of inflation coming down. Maybe he'll end up pulling the prices down of the vehicles enough to sneak under that level. Or maybe they're going to work something out where you can add it on. It's going to be considered an aftermarket part or a piece, but then would you be able to put that into your financing? So I don't know if they're going to get creative with that. We'll have to wait and see. But that's definitely another question that I have when it comes to this EV tax credit and who is going to qualify. Well, you're absolutely right. They're never going to be done ramping the factories. But I think when they get to the point where basically Fremont is now, and I know Fremont is an older retrofit factory, but I think when they get to the point where they're basically capped out, maybe they're hitting 2 million in Shanghai, and they're just kind of trying to eke out a little bit more here and there. That would be what I would consider to be done ramping. But you're right; they're never going to settle and be done. They're always going to try and strive for more. Yeah, Roman, that's one of the things we were just discussing too. Is this is the first time all year that they have broken from the SPY and QQQ. So where do they go? Do we get them reeled back in to trends back with the macro, or are we just? I personally think that we are just now going to be finding another trading level. So we've broken out. We're going to break out and run to whatever level we need to run to before we end up selling off and taking a breather. And then we'll take a breather in our new trading range, and we'll probably end up trending back with the SPY and the QQQ at that point. It's just a matter of when is that going to happen. But who knows where it's going to go until then? I mean, if we get enough catalysts along the way and the macro doesn't pull us back in, if we get good CPI data and there's nothing major that happens, like one of the 19 black swan events that we got at the beginning of the year, if we get through all that, maybe we do just continue to run. I don't know. I truly don't know where we're going to go from here, but I'm anticipating a breather and a new trend that we find. Let me see. Yeah, so in my valuation model, I don't have HVAC in there yet. I've got a little bit of solar and storage. Software is minimal. Robo taxis are minimal. I start that in 2025. FSD I start in 2024. And then M&A I've gotten there. So for me, when it comes to expenses, I kind of track what they've done in the past and what they've said. So if they're looking, capex of between, well, they initially said 5 to 7 billion, now they upped it to 6 to 8 billion. I usually use that as levels, and I kind of track the trends off of their expenses there. And then when it comes to their revenues, I do add in those little pieces of the stuff that we do currently know and growth off of those. But when it comes to the robot, who knows what that's going to bring in for money? Nobody really knows. I mean, it's like going back to the 90s and saying, well, how much do you think the internet is valued at? You can't put a price on it right now. So you just kind of have to have faith and think, is this going to do well? And what market could this take over? And that's just where I fluctuate my PE on that. Let me see. Yeah, Cybertruck happened in 2023. So the good information that I was listening to, and I tried to pay attention to specific words that they use. And initially they were saying production will start for the Cybertruck in summer of 2023. On the last call, Elon said deliveries will start in 2023 in the summer. So again, until we actually get it, I have a Cybertruck on order and I check every single week to see, hey, is this up and running yet? Am I able to configure my vehicle? And I cannot. So until they actually give us that date, I am still going to be cautiously optimistic about summer of 2023. As we get closer, they seem more confident that it's happening. We see more of the Cybertruck out there. They've already told us that they have finally gotten to their final iteration of a prototype for it. So now it's just a matter of tweaking the bugs and then getting it into production and what they need. We know that they have the GigaPress for it. I think that it's slated, last I knew, slated to get to Austin sometime in October. So then, of course, they've got to get it set up and then set up the assembly line. So I'm still optimistic that summer of 2023 it will happen. But until I actually get the ability to configure my Cybertruck and we get specific dates attached to that, I am not going to hold my breath. Let me see. Yeah, you know what? It's so funny, Willie, because like the Cybertruck, I initially didn't get in there. I wasn't as deep into Tesla as I am now when the Cybertruck came out. And so I saw it and I was one of the people who was like, I don't like the look of that. And of course it grew on me. You know, it's an acquired taste for sure. And I now have acquired that taste significantly. So I ordered mine in December, but then they announced the RoboVan. So my intentions for the Cybertruck were to be able to travel the country. I was going to get a Cyberlander with it, and I was going to go travel around, go hiking all over the country to be able to do my awesome hiking videos for all of you guys all over the country, travel and meet a bunch of you. And then they announced the Cyber RoboVan. I'm like, oh, the RoboVan would be so much better if I can configure that into it. So I would still get both. I don't know what the future holds. I'm just excited about either one, but the Cybertruck excites me, and I cannot wait to hear more about the Cyber RoboVan also. Yeah, but you know what? It's so funny because, like my friend, he had bought a Model Y. He was one of the first ones in Connecticut to get a Model Y. Tony, if you're watching, shout out to Tony. He let me drive his Model Y, and you know, for me, I drive a base model CRV, which goes 0 to 60 on a good day. But it gets me from point A to point B. That's all I wanted. I wanted a basic car, gets me from point A to point B. But when you jump into a Model Y, it's like driving a spaceship and it's amazing. And for him, I said the same thing. I go, you could have bought how many shares of Tesla stock with that vehicle? And then his wife ended up just getting hers recently. But if you look back, and for people who bought their Model Y back in the fall, they actually could have made more money on their Model Y than the stock because the return on the investment on the vehicle itself was way more than the stock. Rare that that's going to happen, but that was certainly held true. So like I know I've heard stories of people who had a Model Y that was 3 years old, and they I don't know if I think they used it for like an Uber or a Lyft, made a good amount of money off of it, and then actually sold it for more than they bought it for. What other vehicles can you do that with? You can't. So Ross Gerber on Twitter had actually mentioned how you know buying a Tesla, people are making money on that. I go, you buy the Tesla the vehicle, you buy Tesla the stock, you really can't lose. It's a good investment either way. But personally, right now, I've got the vehicle coming, so now I'm going to put my money in the stock. Yeah, and I'm actually curious. I wonder if they're going to end up using Optimus of any sort for Cybertruck. And then, of course, we have that expansion coming in Austin that is for production support. What is production support? Would Optimus be considered production support? So maybe that's going to be the Optimus factory. I don't know. Lots of unknowns there. I'm very excited to hear what's going on over there. Like there's so many things that are coming, and a lot of people it comes down to do you have faith in Elon and their vision for the future? And I do. I mean, I think that he's got a good vision. Obviously, he's human. He's not perfect. He makes mistakes. But for when it comes to the company, for what they have going forward, I think this is going to be very exciting coming over there. And I think we've got a lot of surprises that we don't even know about yet. Yeah, no kidding. And I didn't get in until end of 2020 is when I got in. So it was post split that I got in, and it's so funny. I was getting mad at my friend because he told me, he's like, "Oh, dude, you in Tesla stock?" He was a huge Tesla fan. I'm like, "Why didn't you tell me sooner?" Of course, I can't blame him for that. Back in 2012, I saw a customer come in with his Model S, and I was like, "Dude," he was like one of the first ones who got a Model S. And I was like, wow. And I wasn't enough into investing at the time to even put two and two together and say I should invest in this company. I just put in the back of my mind, I want to own one of those in the future. So yes, I was definitely late to the party, but just like you said, Willie, you're looking back now thinking, wow, you got in early to the party. And now I'm looking at it, I'm like, I think when we get to 2025, all of us who are invested now are going to be grateful we got in when we did. And you can't, kick yourself for not getting in sooner. You can't change the past. Just learn from what you can and change your habits going forward. Did they move? Let me check mine. I check mine every day. Mine have not changed. So my current delivery date, where did it go? Yeah, my current delivery is the same, but it just moved up like a couple of weeks ago. Mine moved up to this year versus the beginning of next year. So it's nice to see that. And And I think now that Texas has the 2170 line going, it's going to ramp much faster. So now they're going dual, sort of like Berlin is just reversed. So Berlin started with the 2170s. They're going to put 4680s. So at this point, 4680 vehicles are gravy on top of what we already have. So I think this is going to be huge for both going forward because we can base a lot of our production numbers on just the 2170s, and then the 4680s are just going to be a bonus on top of it. And then, even Elon himself said, was it Elon? Maybe it was Drew Beglino had said, next year, the 4680s are really going to be the major focus. We know they're focusing on them this year, but with the slower ramp of them, their focus had to kind of get pulled to, let's ramp what we do currently have and then, figure out the kinks of the 4680s and then get that up and running. So if they do end up getting to that 1,000 battery packs per week by the end of this year for the 4680s out of Austin, that'll be huge. And if Berlin can get to even half of that, that would be significant also. And then don't forget, once they learn how to do it, they can learn how to speed it up, and then they can just copy and paste to all the factories that are going to be running the 4680s. Hello there. And I know I said this. I said in the beginning this is going to be a shorter live stream, but look at this. Like this is great. I love these because I can have conversations with you guys live instead of just in the chat and the comments on my regular videos. Yep, there you go. Craig's saying it himself too. He can sell his 2020 Model Y 31,000 for more than he paid for it. It's crazy. It's absolutely insane. And then of course the problem is like me with my vehicle, I can get now. Again, I drive that boring CRV and I've got bullet holes in the back of it. And Tesla is willing to give me $8,600 for the thing. I'm like, dude, I was hoping to get $2,000, $8,600 because the used car market is so hot right now. And so, yeah, you can sell it to make a profit, but do you have another vehicle that you can use? And if you do, is it a Tesla? So, a lot of things to weigh out there if you actually want to do that. But yeah, it's crazy that you can sell vehicles now for more than you originally bought them for. Because normally, as soon as you drive a vehicle off the lot of your dealership, its value is completely gone and you're never going to get back as much. You could drive it across the street and you wouldn't be able to sell it for as much as you paid for it. Let's see. Nice, 340 a share. I love it. That's like when, Kimball exercises his options for $74 a share. Must be nice. Thank you kindly. I appreciate that. Thanks, Norbert. Love you, man. Yeah, that's one of the things I'm paying attention to also. I'm getting lots of FUD and I'm trying to get through all the noise on that to find out the true facts of what's going on. And it's so hard with media these days because media can swing one way or the other to make it sound, like disastrous, while other times it's a non-issue. Um, Nobody asked Elon about it. I haven't heard straight from him what the situation is there. From what I know, like looking at, for instance, Austin, they've got the giant solar panels going on the roof. So I would imagine that they're going to be looking to get their factories all built to be self-sustaining. Whether they can get away with not using natural gas or whatever else is going on, that I don't know. I don't know enough about the factories and what they use for energy in them to be able to run. So that is something to pay attention to. It's hard to get all of the true facts out of there, but it's something that is on my radar to keep an eye on. Yeah, it's funny because when I first started to get into Tesla to invest, my dad, was more into investing than I was. And I saw Tesla, I thought it was awesome. And he's like, Tesla swings a lot, great for swing trading, but it's very volatile. So you got to be careful. I didn't know enough about the fundamentals of the company. So just going based off of that information, I was definitely leery to put my money in. Plus, at that point, I didn't have a lot of money to invest. So I would have literally had to put all of my money into one share of Tesla. And I couldn't do fractional trading at the time because the platforms didn't exist for it. So I was like, I don't want to put all my eggs in one basket. I still don't have it there. My dad encourages me not to do that, but I'm like, I have such high conviction. I am still okay with putting 69% of my portfolio into Tesla. I will probably grow that over time and let it go. Plus, I'm also diversifying into real estate. So it's not all my eggs in one basket. When it comes to stocks, I'll do it now that I know more of what's going on with Tesla, the company. But man, you're right though. Back then, especially when they were potentially going bankrupt and the FUD was all over the place, you need to have high conviction to be able to fight off some of the FUD that gets thrown around out there. So for those of you guys who have held on, yeah, congratulations, because you guys have all earned it. And those of you guys who are shareholders before 2018 and held through that time, you guys are the real champions. Thank you. Thank you. Thank you all. Yes, Jerry. Heading to 10,000. That's the next big one. Let's get to there. Yeah, and when I was over there in Sweden, I spent more time in Norway than in Sweden. Love both of those countries. I cannot wait to go back, man. It's beautiful over there. And especially going through Norway too, you know, even when I was there, and I was there in 2019, the end of 2019. And there were supercharging stations everywhere, everywhere. Every single rest stop that I came to just loaded with supercharging stations. Nothing like you see here in the US. So far beyond. And that's why Norway is leading the world when it comes to the EV revolution. I think the last count we had was like 90 something percent of the new car sales are EVs, something like that. Correct me if I'm wrong, but I know the number is ridiculously high. And I'm looking forward to the entire world going in that direction. Thinking about the fact that, worldwide penetration for EVs right now is like 5%. Gosh, I got to get my updated numbers. I haven't even seen them in a while, but it's still a tiny, minuscule percentage of overall automotive market sales. So when people start, arguing about competition is coming, like, dude, it's not EVs, versus EVs. It's EVs versus ICE, and there's plenty of room for everyone to grow. So like I've always been saying, the next 3 to 5 years are going to be big for everyone for production. So, hearing earlier, somebody had mentioned that that Ford Mach-E is producing 2,000 per week, and that's great for Ford. Obviously, the more manufacturers that can produce vehicles, EVs faster, the better. It's going to be fantastic. And sorry. Nice. Yeah. Next time I go there, I will spend more time in Sweden. I spent a lot of time in Norway. Definitely want to check that out. So yeah. So when I lost my train of thought. Sorry about that. So yeah. So when EV revolution taking over, seeing as we've got. Sorry, I'm going to have to get out. My battery's going to die in a moment. So seeing as the revolution's taken over, Ford pushing up 2,000, the big piece I'm really going to pay attention to next year is going to be, all right, is Ford going to stay ahead of Berlin and Austin? Because right now, Ford producing 2,000 Mach-E's a week is faster than Berlin and Austin. So where are we going to be next year at this time? So next summer, I'm going to pay attention, have Berlin and Austin eclipsed Ford or not? Because that can really give us a strong indication as to which company is ramping the fastest and if anybody can actually catch up to Tesla. I don't think it's possible, but at least we can have some true data at that point to be able to base apples versus apples. So Ford Mach-E, which started production a little bit before Austin and Berlin, so it's expected that they're going to be further ahead, but can they stay further ahead? That will be the big piece to pay attention to next year as we ramp. So again, I think it's good that all of these EV manufacturers are producing. It's just a matter of, can they stay ahead of Tesla and continue doing that? And yes, as Willie points out too, yes, they may be producing 2,000 a week, but they're not making any money on them. So that doesn't help them either. So, as we mentioned with GM needs to produce 7.5 vehicles, not just EVs, vehicles. They have to produce 7.5 vehicles to make the same profits of every vehicle that Tesla sells. All right, last question. I got to go before my battery dies. Jack, red or green tomorrow? Ooh, gosh, that's a tough one. RSI is at 70.89. We have been on a massive run. We are in a new month. We've got the annual shareholder meeting coming up on Thursday. There's no other macro stuff going on. I can see us going green, or maybe we have a little bit of a red day, cool off, bring the RSI down below 70, and then we have a nice little pop again after the annual shareholder meeting. That's my guesses. I think we're going to cool off before we pop because the annual shareholder meeting is until Thursday. So we've got basically 4 days before that happens. So we might be red for a couple of days to cool us off. Maybe we get that nice little consolidation and find ourselves a good support, and then we can bounce off of that for the annual shareholder meeting. Conversely, and I like to play, multiple thoughts in my head, the annual shareholder meeting could be a sell the news type situation because everybody's anticipating we're going to get the split news. But if Tesla announces something new that nobody's anticipating, that could pop us higher. They announce factories, they announce a new product, maybe they announce buybacks. I know we discussed that previously. I won't get into it now because the battery is going to die, but I am going to make a video about my thoughts on the buyback and a potential buyback in the morning, so you guys can follow it there. So I will let you guys know about that. But if we get that kind of news, we could see a nice pop at the end of the week. Yes, and as Craig is saying, I do this all the time. I always track crypto over the weekend because that gives us an indication as to which way the macro is going to move. And as of right now, we've been kind of flat all day, going up and down with some major swings, basically flat. So we've been pretty even over the course of the day today. I will continue to track that overnight, and then I'll check it in the morning. Thanks, Willie. I appreciate that. All right, before the battery dies, I'm going to get going, guys. Thank you all so much for being on. I know I said it was going to be short, but you guys were with me this whole time. I loved it. Fantastic. I love these live shows. So we will see you guys later again tomorrow morning. I'm going to be discussing the buyback potentials and some other catalysts we have coming up. Otherwise, I will check you guys later. Thank you so much.